Hey, very good morning to you traders. Mark here from the Daytrading Room. Okay, here's a little tip. If you're losing money trading, you want to try anything possible to stop yourself losing money. Flatline that account and then build it so that the equity curve is moving back up. So, why not try this? Every day I'm talking about traders of intraday trading, scalping, tape reading, have you identify yourself. The type of trader, if you are this type of trader who comes in and looks for long and short opportunities in one specific market, maybe two specific markets. How about this as a method? When you come in, instead of looking for both longs and short, align yourself with one side of the market only. Now, it may seem a bit counterintuitive, it may seem a bit counterproductive, but this is worth a shot, because what it does is it frees up your mind to look for one specific opportunity. Instead of long, instead of short, you're looking at either only longs for the day or only shorts for the day. Now, you can do this analysis pre-market or whatever. It doesn't actually matter so much whether you're right or wrong on the day's move, because the market at the moment is reasonably volatile enough that it's offering opportunities on both long and short side. Example now, DAX in the morning, there's a long trade there, there's also a short fade trade there. There's plenty of opportunities every day in most markets you're looking at on both sides. But if you're focused on one side only, not only does it give you more of brain power to be able to zoom in on what you're looking for, but also it eliminates regret and missing. It basically it dampens out some of the emotions that you feel as a trader that cause you to make those losing trades and go on tilt. So if you're only looking for shorts, an example, and this DAX starts to rip up here, then what do you feel? You feel nothing, because you don't feel as if you've missed a long. You don't start thinking, oh, I should have got on the long side of that, I should have done this. You just know that as looking for shorts only, the market at this moment in time, or at that moment in time, is not ripe for it. So you can relax a little bit and plan your next trade. Maybe your next trade is going to be short of a break on here and a pullback and a retrace, or maybe it's going to be something as we push up to prior day's resistance, a second test, a short of that, whatever it may be. Okay, so it basically allows you to relax. It allows you to just reduce those trades. How many times at the end of the day have you looked at your total number of trades and you've just seen a massive amount of trades you've seen and you've lost money? Maybe you've made actually money, small gross, but you've lost money on commissions. You've been long short all day long, and you've achieved nothing. Whereas in actual fact, if you'd have done a couple of trades on one side only, you'd be up okay. Now listen, we're not looking to make drastic amounts of money here. We're not looking for this to become the exact method you're going to use for the rest of your trading career. We're just looking for a little way of just flicking the switch, just turning the tables, and just allowing your mind to focus on the actual trading setup itself, rather than worrying about, I should have been long, I've missed that. I want to jump on this, I want to make sure I'm on it, this, I'm missing that, what levels. It just reduces the workload by 50%. In actual fact, I've tried this technique many times, and very often I'll come back into the market if I'm not in tune, if I'm having a bit of a period where I'm just not performing as I want. I'll just do this, and it doesn't matter if you're wrong on the direction, because let's be honest, trend days are very, very rare. Well, not very, very rare. They are the exception rather than the norm. Most days we test the upsides, we test the downside on both markets. Sure, we get trend days, and if you've come in and you're aligned short on a long trend day, you're not going to take a trade, or if you do, you're going to get stopped. But that doesn't matter. You've got nothing to lose by trying these sort of things. If you find it works for you, then great, you can build on it. Hey, you can even use it as a strategy going forward for as long as you need to. So align yourself long or short with the day. If you're aligned long and you come into the day like this and it starts pushing up, what you're looking for, you're going to look for, you're either long first of all and you see the tape action, or you're going to wait for a first pullback and you're long here, or you're going to wait for a counter trend cycle that goes a little bit lower, retests, and then pushes back up. Either way, you've got an opportunity. And if it's gone too high and you've missed all that, it doesn't matter anyway. You say, okay, I'm going to wait for my long, I'm still aligned long, I'm going to wait for the unwind, wait for some sort of support to come in, then I'll rebuy. So whichever way you're aligned, it doesn't matter, but it allows you to focus on that one specific trade idea, trade method, and most of the time you're going to get the opportunity, because the market is two-way, up and down, back and forth. It's going to reduce your trades, and hopefully it'll bring you out of a losing trading position into an account that's moving upwards. So good trading, guys. Manage the risk. Take care.